All right, guys, so today we're going to talk about biotech ETFs. I think this is definitely an addition to any portfolio. You can make it less than 5%, but these are very volatile. They go up and down, and you definitely need a strong stomach to hold this. So I was doing some research, and I found the best biotechs of 2024 looking at the Motley Fool. I looked at this one at the iShares Biotechnology ETF, and I'll show you why I'm not a fan of it, mainly because of the expense ratio at 0.44%. We have $9 billion invested, but it's too heavily concentrated in these pharmaceutical companies. What I really like and what I want to break down is the Spider SPF Biotech ETF. It has a nice expense ratio of 0.35%, gives you a dividend yield 0.23%, has almost $8 billion in assets, but what I like most about it is its modified equal weighting. That means every single pharmaceutical company that's within this ETF is equal weight. So you're not going to have too much money in either one. All right, so now we're going to focus on the Fidelity website. We're going to look at the Spider SPF Biotech ETF, which cost about $88.72. We'll do a quick overview on it. As you can see, opened at $90. Expense ratio is 0.35%. Net assets, $6.262 billion. Let's take a look at this chart. Max chart right on this. As you can see, we started off at $20, went all the way up as high, this is during COVID, up to $171, and now at $93. So we are buying somewhere in the middle, dollar cost averaging, not a bad idea. Definitely have some room to grow here. So on the Fidelity tab composition here, as you can see, it says that this investment seeks to provide results before fees and expenses in S&P Biotechnology Select Industry Index. So we know 80% of the stocks in here are all going to be within biotechnology, which is what we are looking for. We want concentration in that. This is passively managed, and that's why your expense ratio is lower compared to other competitors, which I'll show you in the next clip. And as you can see here, the holdings, 126 biotechnology companies here. This right here, top 10, because it's equal weight, as you can see, there's not too much concentration in any one stock. As you can see, Cytokinetics is the most at 2.71%, but the rest are at 1.8% to 1.4%. And it's all within small and micro cap capitalization. So if you look at the style map on the bottom, this shows you small and growth. So that's what you're investing in, which is really nice. I want to show you the view holdings all by weight just so you can get an idea on it. As you're looking at it, it just gives you, you can take a screenshot of this. It just shows you the company to the left side and then the percentage weight of the ETF. Whereas Cytokinetics is 2.71, and then scrolling down, you can see the percentages changing, but they're all equal weight around 1.1% to about 2% max. But it's definitely good to see what your money is going into. And it's really hard to pick biotechnology stocks, so it's nice to just look at them and just have a whole basket of them and just ride the wave. All right, so Spider S&P Biotech ETF, as you can see, distribution and expenses. The yield is nothing, 0.02%. We're looking for growth here. We're not going to get dividends from small and micro cap companies. So definitely something to think about. And your expense ratio, 0.35%. Let's look at the performance. Looking at the performance, as you can see, the life is 10% a year, whereas some years, like in 1 year, it went down 1%, in the last 3 years down 16%, 5 years 0.96%, 10 years 6%. So as you can see, this is a very volatile ETF, and it doesn't guarantee returns. That's why we allocate a small percentage of our portfolio to biotech. When it comes to institutional ownership, this is 94% weighted. So the big guys, 94% of them own it. When it comes to other, I'm thinking retail, so 0.1%. I just want to show you the structure of it. The key statistics show that this is an ETF. It's an open investment company. And the net expense ratio is 0.35%. All right, so last but not least, I just want you to see the competition out there. This is XBI that we reviewed, sector equity, passively managed, and this is why you have a 0.35% expense ratio with $6 billion in assets. Another ticker symbol is BTEC, which is actively managed, and you get a higher expense ratio at 0.42%, But look at those undefined net assets, only 46 million. So can we really trust it is the question. Then you have BBC, which is a 0.79% expense ratio. BBP, another 0.79%, and PBE, which is 0.58%. So I just want you to see other ones just in case you want to look at other ones on your own. But XBI I decided to make a video on because, in my opinion, I just want to show you the best that I possibly think for ETFs, and you can compare it to other ones that you've looked at. All right, guys, thanks for checking out my video. If you feel like you learned something, definitely comment, like, subscribe, and then check out my other videos. I have best dividend ETFs, where to invest your money, what is an ETF if you're brand new. I go over growth funds, I go over the NASDAQ, and then just different real estate funds that you need, or potential total market investments, or even another ETF such as SCHD, the king of dividends. And if you're really wondering how to do automated investing, check this video out as well. It'll definitely give you a good start on investing.